is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 12th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, well, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 124 points, 25,212 is the print. The S&P is flat. She's trading at 27.87. NASDAQ 100 is up 51 points. That's 0.75% to the upside. 71.52 is the print. Russell's up 3 points. Semis are up 21 points. That's 1.5% to the upside. New York Stock Exchange is negative. NASDAQ Composite up 43. Interesting. You have the spot volatility index up $1.38. That's nearly 10%. It's 9.43%. One-day rate of change. You and I are used to the S&P falling and seeing a spot volatility index have one-day rate of change greater than 10%. That is not what we're looking at as we speak right now. So and it wasn't Schultz. I always think it was Schultz. It was the guy from Rowan and Martin Laugh-In. It was what is that guy's name? But in any event out there, you know who I'm talking about. He always said very interesting. You've got gold down $5, silver's off 10 cents, leading the charge dollar-wise. The upside booking holdings of $43. Amazon is up 25. Tesla's up 17. Google's up 14. Charter Communication up 13. Netflix to the downside off $10. Cooper Company's down 9. Boeing off 9. AutoZone off 8. And Simpress NV down about $9 as well. So where do we begin our day? I have a request out here if we could go take a look at the NDX 100. So let's start our show off by looking at that. We're going to see really two different markets as we speak right now as of 1 o'clock in the afternoon. So if we look at the NDX 100, we'll start off, let me see here. Let me pull up the actual indice. I'm going to switch to a different set of worksheets out here, and we'll pull the NDX over. So let's start by taking a look at where the significant level of support is inside the NDX 100, and we're going to say it's Stevie's red line. So you can see that we're at a brand new all-time high, 71.51.41. Stevie's red line reading is 69.77. So any pullback, if there were to be a pullback, should find support there. That's the first thing. Let's go take a look at the QQQ series ETF out here. And by doing so, we're going to just simply try to take a look at volume. Just do a very simple volume analytic. And the swing point that we're looking at is February 27th, 42 million shares traded on that day. On Friday, as that swing point was passed, as that resistance level was passed, it was 38 million shares. So slightly lighter volume. The actual swing point itself inside the Qs, the high was 170.95 on January 26. Now that had 32 million, and it was passed with 38 million. So do we have volume or not? You'd have to say, as we took out the all-time swing point high, yeah, we do. Or let's go ahead and give it the benefit of the doubt. And if we give the NDX or the Qs the benefit of the doubt out here, well, then that's going to go ahead and give you an A to B equals CD target of 182.56, maybe 188.17. But wait, there's more. And by more, last week was the end of a week out there. So let's go see what do we do volume-wise as we pass that all-time, or what once was an all-time high at at 170.95. Yeah, that's correct. That was 179 million shares, and we were passed with 167. So the weekly was slightly less volume out there. Can a market move higher with lighter volume? And the answer is absolutely, positively yes out here. If we take a look at the Q series ETFs, let's do that on this, where we can take a look at 3 different sets of profiles. We have both a daily, weekly, and monthly. Prices above each of those, and Friday's move was a clear bust out of the 170.91. So here we're seeing nothing but blue sky, so to speak. Well, if we're seeing nothing but blue sky, let's go take a look at a couple of other meters out here. And so I've got to change charts, and I also have to look for another chart to really answer the question. I'm probably going to save this chart here for the segment I do with Tom at 3, since I haven't prepared anything. But that's okay. I was asked to look at it, and therefore it's incumbent upon me to look at it appropriately and from both sides of the trade. So what I'm looking for is the following. Is this a real breakout or not inside of the Qs? And today, I would say the closing of not the QQQ series ETF, but instead the QQEW is the more important close. That's what we're looking at if you watch this on Tiger TV. I'll describe to you, for those of you that are just listening on your mobile device or however it is you're listening to the show, but the top portion of this screen is the equal-weighted version of the Qs. The equal-weighted ETF structures are really what help to confirm or deny, point the way, what's the real way, what's the real direction, have we really taken out a serious swing point appropriately? I'm kind of searching for words out here. But the bottom line is that when the equal weight doesn't give a hoot what Apple's weighting is, or what Google's weighting is, or what anybody's weighting is, because they're all equally weighted. And when the equal-weighted ETF can take out a swing point, which it did not on Friday, but it is trying to today, and a swing point high that it has out here is the trading session from January 26th. That was the close. You're looking at line charts, so you're just looking at closing prices. That's what's really important to me. Right now, the QQEW, the equal-weighted ETF, is trading at 63.31. If it closes above 63.15 today, it will confirm the breakout inside of the QQQ series. This is perhaps the most important chart for you to focus on to answer your question about the NDX. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've got a dichotomous market. Apparently that's a word that I can use because I'm not very good at saying I'm really not very good at saying bifurcated markets out there. In fact, it's kind of like it's a block inside my mind. So instead, we're going to have to go with dichotomous out there. Hopefully, I'm using that properly. But I believe, based upon this posting here by your favorite polar bear and me, and I, well, not by me, but he posted it, that I'm allowed to use that. However, I think P is more correct. I think I can just stick with the word divergence out here. And speaking of divergence, then, and I mentioned that the spot volatility index was up nearly 10%, and the S&P was basically flat to slightly higher. I don't know exactly where it's at this moment, but what we're looking at out here with regard to the charts are the daily equity futures contracts for the ES Mini, the NQ, the YM, and the Russell 2000. But I'm mostly focused now on the S&P 500 or the ES Mini. And here's what we know, and here's a little bit of the divergence with regard to the NQ or the NASDAQ 100 moving higher and the rest of the market saying, hey, I don't know, not so fast. They didn't get the RSVP. They did not get the invitation, clearly, because we have not seen an RSVP when it comes to the S&P. Now, in taking a look at the left-hand panel of the chart here, one of the things that we know about Friday's action, the bullish side was that it closed above that 2774. That meant it got back inside its range of its daily TAS profile. Now, we also know that that is a bearish structured box. Bearish structured by the nature of how it's formed, center line closer to the bottom than it is to the top. Now, the center line the one of the tools that we can use, or the interpretations of that, is just simply that is the place that both buyers and sellers are most comfortable with price. How do we use that for an interpretation? Well, with regard to sellers, it's a price point where they are comfortable taking action and selling. Now, we didn't get exactly to the 2808. In this case here would have been probably 2808.50 or 2808.75. Instead, the high was 2805 out there. But we use this as really a guideline. It's acted as a resistance level out here. Closing above this area, well, then that would get us back on the bullish side. The front line of sellers will have vacated. So the real key area, or one of the key areas to be watching, is this 28, we'll call it 2809 level inside the ES Mini. Okay, so we know that. What else does that mean? Well, if we take a look at the ES Mini, and this is something that subscribers and I were looking at this morning at about 8 o'clock, and what occurred last night is this price was moving higher into, it really was this morning, 3:30, 4 o'clock this morning, price was moving higher, doing with less relative energy out there. And at the same time that was occurring, we know that by the diagonal lines on Stevie's charts out here, a little customized tool that I have created, was the bears, the sellers, they actually woke up and they showed up exactly at 4:30. And they began selling away. And at this stage here, what we have is on a short-term basis, we have a confirmed sell pattern. Now, this sell pattern can give us a couple of different pricing areas as to where price ought to pull back to. The first one would have been this red dashed line in the 2794 level. The second area is down here at 2778. And the third level is where the breakout began on Friday. That's right, where the breakout began on Friday of 2738. So on the 30-minute, so we know on a daily price, we take a look at the task market profiles. We know where the sellers are camped out. And so far, that line has held as resistance. We look at some short-term charts or a 30-minute chart out here, and we can clearly see the same type of pattern that forms at tops and bottoms, all different time frames. Out here, we can see that Stevie's red line clearly is acted as resistance. So that says, okay, until price closes over Stevie's red line, right now 27.96, lower prices may, in fact, be in the cards for the ES Mini. Well, let's go further out here. And by further, let's do this. Let's take a look at the market breadth for the S&P 500. Let me try to do that. Here we go. And let me pull this over. And now what we're going to be looking at inside the S&P 500 is the market breadth for, well, I won't call it the shortest time frame, but I'll call it one of the shortest time frames that I have. This is a 60-minute. This is a 60-minute time frame where we can see that at this stage here, the market breadth is still bullish. So now, guess what we have? Some divergence. What did we call it? A dichotomous set of charts out there. So what does that mean? That means still bulls are in control. Let's look at a 60-minute time frame chart out here. And the 60-minute time frame chart is going to say, you know, not so fast, because it too, price was moving higher, doing less relative energy on a 60-minute time frame. Guess what? It gave you a confirmed sell type signal. So now that means what we need to do out here is we need to just go take, and we don't have a confirmation with regard to market breadth. So that means we don't have a, excuse me, I still have the crud, although I've gotten rid of a lot of it. And now I'm at that stage where I do not want to cough inside this microphone. But to speak like I do, the throat kind of dries up, if you know what I mean. And although I'll tell you what I will do. I'll go take a little scoop of honey. I don't know if I can do it during the break, but maybe I can, because that ought to just simply calm things down. But what I was going to say is we just need to go to the shorter term set of market profiles. So we've got 30, we've got 120. Let me change that to a 60-minute time frame out here, because that's going to be more important. And so what we can see here is that price is below the bottom of its bullish structured box as well. So that says any bounce out here inside of the ES Mini ought to find some resistance between 2796 and 2798, and 2800 excuse me, is the top of its 30-minute box out here. So what is Stevie saying? Stevie's saying that we have some divergence going on out here inside of the markets, because even inside the ES Mini out here, and what I'll eventually get that out here. The concern is still, what is that spot volatility index doing? Why is this thing on the rise? Now, look, it's below the 50-day exponential moving average. That's clear. That's 1702 right now as we speak. And the spot is trading out at 1601. Let me get a different chart. But this is a problem. It's always a problem. It's not always. It's oftentimes a problem when you have the spot volatility index rising, because this is just maybe day one. The day is not over. But compared to Friday, it's always a problem if this continues to rise. It becomes a real problem if it gets above the 50-day, and we see the S&P 500 finish higher. There are other instances of that. Sometimes those instances lead to some pretty nasty pullbacks out here. We know that we're in a fairly volatile time period. And look, on Friday, I was basically way off my game. I had said to you on Friday that the average daily price swing inside the Dow was 430. And that maybe, and this was before it was way up in the 400s, we could close up 430. I was wrong, dead wrong, because it closed up 440. I'm sorry about that. Dow's off 130 right now. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back. And so just to kind of finish this off here, and at least the thought process out here, so I'm not just confusing everybody, including myself, what you'd like to see, especially when you have a day like we did on Friday, and we saw markets break above some resistance levels, is you'd really like to see some follow through. And you'd like to see some unanimous voting going on. And I am not seeing that as we speak right now. And when we take a look at the spot volatility index trading higher, albeit below the 50-day, and the S&P basically flat. If we take a look at the 240-minute time frame chart here for the ESPN, you're going to see several patterns, or a couple patterns. You're going to see where prices moved higher out here, and it's made a 1 to 2, A to B equals CD to the up. I'm sorry, 1 to 1.272, in essence, A to B equals CD to the upside. Right now, as we speak, we are in a candle session that is going to complete, I believe this is one by 2 o'clock. Am I correct out here? Yeah, by 2 o'clock. So we're only talking 29 more minutes. And if that's the case, right now we're looking at a bearish reversal signal. That would complete, in essence, the A to B equals CD pattern to the upside. Now, what you'd want to see over the course of the next candle session is a move lower. If it's going to give you a sell move lower, your preference is to see it close below Stevie's red line. Now, does it have to do it during the next candle session? No. But if it does, 2783 is the number that you're looking for. Close below that level would be the type of confirmation that at least a pullback is in way. I'm not saying that the top is in. I'm just saying that we don't have confirming signals coming from all over the place out here. And therefore, and we do have these topping patterns. In addition to an A to B equals CD, the 240-minute chart happens to be singing the key of G, wave number 7, to the upside out here. So it bears noting, and so I will answer the question this way, even though nobody had it, is do I believe we got all the confirming signals that we needed on Friday in order for these markets to move higher into May? And I'll answer you this way, and you have to admit, well, you don't have to admit anything, but I've been pretty good about guiding you in the markets and these markets identifying bottoms. And so the answer to that question is no. We did not get all the confirming signals that you and I need to see in order to confirm that the market is now ready to roll to the upside through May. Now, the market can easily change your mind and change my mind, but we need it to prove it to both you and I. So hopefully that helps you out. We had a request come in, so hopefully I've answered the question with regard to the NDX 100 that was put out there, and because I've kind of brought it around to the non-confirming signal. And hey, that's not the only non-confirming signal, by the way. If you take a look at the Dow out here, Basil probably covered it. I didn't get a chance to catch his show, and if he did, I apologize for repeating this, but I'll just confirm probably what he said. If you take a look at the descending trend line inside of the Dow out here, that's exactly where price stopped this morning on its move higher. So that trend line closing above that would be a beautiful thing, or another confirmation. That would be a confirming signal. Right now, it's not confirming it's not confirming that it wants to participate. That gets you to that dichotomous market out there, or that bifurcation. Hey, I got the word out. I didn't really think that I could, but I did. Okay, so let's go take a look at what the next request was, which was for gold and silver out here. And in the case of gold, I think we're just really in this sideways-ish type market. And we're in this waiting for the price oscillator, bottom panel of our screen, the difference between two exponential moving averages, 19 and 39. We're just waiting upon this to get down to 0. It's very close. It's 0.73 is the reading right now. It was 0.45 earlier. It's getting very close. At this stage of the game, you don't want, if you're not long, you don't want to take. Now, I'm not talking about intraday traders that are trading off of some very short-term charts. I'm really speaking to maybe the larger majority out there, wondering, should I go ahead and get in on the going long gold, or going long silver, or going long the mining equities? My response is going to be, if you're not in, then don't go in, because you're so close to a test unfolding that'll give you the answer that I believe that you're looking for. At least it's the answer that I'm looking for. And I don't know if this is an answer that tells us that gold is going to move to the upside, should, based upon the longer term charts, or it's going to start moving to the downside. Now, to the downside, maybe it finds support at this descending price channel that you're looking at on my screen. I don't know if that's the level of support or not. What I do know, Tucker, is that you really should wait for this price oscillator to get down to zero. And then you should wait to see what happens when price and Stevie's red line catch up to each other. Does price close above it? In which case you would then turn the price oscillator up above the zero line. That would be a bullish move. Now the bullish move might find resistance at that descending price channel, kind of like we just looked at inside the Dow. There's one inside of the gold contract as well. Or does it close above Stevie's red line? Does it get up to that descending price channel and then take it out? In which case that would be a double gui confirmation that there was a bottom that was put in. That bottom may really be right here on this trading day, because so far this is the bottom that we're looking at on March the 1st out here. So if you're not in, you don't need to take any action whatsoever. If you are in, you almost have just really a neutral message. Now, you might say, how can we have a neutral message? There's a descending price channel out here, so we know where resistance is. Well, both you and I also know where support is. And the reason that we know where support is because you and I are fortunate enough to be able to go ahead and take a look at, as soon as I can find it, this chart here. Oh, that was for bonds, so that's not the chart. Let's change this here to Goldilocks. And you and I are fortunate enough to have the daily set of profiles, as well as the weekly set of profiles, but of course this is just Monday, that show a bullish structured box with price having strong support at 13.1540 or thereabouts. It's held. It was tested on Friday. It held. It was tested this morning. It held. What we know is that level of support is pretty good, strong support. Does that mean you go ahead and take a long position in gold? An aggressive trader absolutely can. And an aggressive trader will say, man, if I see it close below 13.1540, I'm out of here. Sayonara, take a small loss, and wait for the next step of confirmation. Now, that doesn't mean that gold doesn't just move down to the lows of March the 1st, and then it says, hey, I test that and reject it. That's a possibility. So that low out there is about 13.03. So if you were going to take an aggressive action, your stop really needs to be below 13.0360 out there. And I mean probably a buck or two below that as well. So then you just simply do the reward to risk, because the reward right now is 13.39 to the upside. So determine if that is worth the reward, because you know what the risk is. That's the first element. That's the most important element of being able to figure out the trade. And then you can figure out, well, where is my likely outcome? And I would say that would be 13.39. So hopefully for those of you in all those styles of trading, that information helps you with regard to gold. I know you asked about silver too. So with regard to silver out here, the positive on silver, if there is one, let me see, is the mere fact that price has tested and rejected Stevie's red line. That's priced at 16.48 as we speak right now. Now, the problem here inside of silver is that its price oscillator is below zero, not really where you want to see it. So I don't think we're going to see any kind of high-ho silver until Goldilocks gets its message. And if Goldilocks' message is to the downside, which it could be, silver's not any place you want to be long and strong. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
You got to like it. That spoonful of honey did the job. No hacks during that last segment. So we'll see how long that lasts. Hopefully it'll last for the next 20 minutes or so out there. Artie Johnson, that's the character that I was, or that was the star, I guess we call him, right? Movie, the actor that was inside Rona Martin's. He was the one that always said very interesting out there. So thanks to Jamie for that. And John wrote in and asked what my thoughts were on Netflix based upon today's downgrade. So I wasn't aware about today's downgrade, but I think John said bearish call on it. I'm not sure who was the bearish call, but it doesn't really matter, right? We just need to go take a look at the chart out here. So let's start with taking a look at Netflix. And let's start with this daily chart. And here's one thing that you and I know. We can see that price has been trading higher, doing less relative energy. And up until today, it didn't mean a thing because it didn't have that swing. Now, what the heck does that mean? Well, first, let's just go take a look at other patterns that are in play or might be in play. I don't know if they're in play or not. So the first thing I need to do is look for a low to begin doing our wave counts. Okay, so that's just going to take me down to December the 4th. So from December the 4th, I'd start doing our counts to the upside, and where are we at? Oh, that's interesting. Okay, so there's a couple of patterns that you and I like to trade. One is we just respect the mere fact that the market likes to sing in the key of G. And today, as we speak, we are in that seventh wave move. It looks like we got into it on Friday. So you've got letter G, you've got price moving higher, doing less relative energy. And as we speak right now, 144, you've got a bearish reversal signal out there. So you have basically everything you need. Price has found support. It's trading right down at Stevie's red line. That, by the way, well, because it's right behind here, I need to put up another little tool, my little data box. So the actual red line number, for those of you that would like to write this down, 320.76, you're at 319.41. So if you close below Stevie's red line, what does that suggest? It suggests you're going to see lower price. To where? This chart says 276 to 271 would be the price move. Doesn't mean that it can't break below that. That just becomes your target. Let's come over here. Let's type in Netflix, NFLX. We're just looking for its market profiles. And, okay, This gives you a, so this is nice to Friday. Friday was a brand new market profile inside of Netflix. And you are back inside that box, so to speak, an equally weighted box, meaning the center line's truly in the center. So this says 308.77 becomes the first target. Below 308.77, then you've got those other levels that I gave you. Again, that was somewhere around 277, 272 out there. That's what I would be looking at inside of Netflix. So if you're short, if you're long, I'm not suggesting which side of the trade you should be on. Instead, figure out where it is you're at. If you're a long-term holder of Netflix, right now, as of 145, the signals are this should pull back. And that way you just anticipate it. You know what to expect out here inside of ticker symbol NFLX. So, John, I hope that that answers your question out there. And I have no other questions. There's nothing in the queue. You can get in the queue. All you have to do is send me an email, steve@tfnn.com, inside the Tigers Den. Just go ahead and post a request, and I'll be happy to go ahead and show that up on our screens out here. In the meantime, what else is it that you and I are going to be watching? Drum roll, Johnny. That would be 2784. I'm looking at that in the ES Mini with bated breath. Where did that come from? Bated breath. Anyways, I use some of these terms that you and I are so used to using, but most of the times I'm not even sure where they come from. But it's always great to find out. In any event, here 2784, whether your breath is bated or not out here, to me that's an important level for the ES Mini to continue to close above in order for the bullishness to continue inside of it, as well as the other indices out here. As I take a look at this chart, it is somewhat divergent with regard to its signals. So, Steve, appreciate your very detailed coverage in the markets and stock ETFs. So you're excellent. Okay, thank you, Tucker. You're welcome. I'm glad that that's helpful to you. What else are we going to look at out here? Well, this is going to be an interesting chart here, the New York Stock Exchange. So let's take a look at it. So the New York Stock Exchange is, well, here's what we know right now. It's advanced. Now, it broke through a descending trend line on Friday. So short-term bullish. What does that mean? You head up to its swing point. That's the trading day of February 27th. Until it takes out that high of 13,018.14, we don't know much. Now, Friday's close of that advanced decline oscillator was at a positive 150.53. You know how I say if we can get it closing above the plus 150 level, that's important. Well, I got to tell you, plus 150.53 is nice, but it's no cigar. I mean, you got to close above that level. Now, you could do that today. But the advanced decline oscillator reading, that's a different swing. It's 19 to 39 day exponential moving average of its advanced decline data over the last 19 days out there, just to be exact as far as what that is. It's trading below the plus 150. If this thing turns down right here, right now, what we basically have is a plus 150 failure. Now, that does not mean that the sky is going to fall. It just means, though, that you got to that last hurdle, which was so easy to get over, and you didn't do it, and now you're going to take a break and a rest out here. So, again, another one of those confirming signals you'd like to see, and we can see it tomorrow. It doesn't have to happen today, but if we do see it turn down here, then you've got another failure-type pattern inside the marketplace. So watch that reading at today's close. Somewhere north of, let's just call it, I don't know, 155. 155 would be nice out there. Then what that tells you is you have higher prices coming at you inside the New York Stock Exchange over time. It doesn't mean the very next day. It just simply means over time out there. So that's something else for us to go ahead and take a look at. What else is there? I see something else, but I'm going to leave that for at least the segment that I do with Tom. At least I think I am. I need to put that together. It's always nice to have something put together, you know, when I chat or try to provide folks with information that most wouldn't be familiar with, and a way to take a look at the market to either confirm or not confirm what it is that you and I are looking at out there. So I suppose the next thing that we ought to go take a quick peek at, maybe just some other individual equities out here. Why don't we do that? Let's take a look at AutoZone, AZO, see what that is doing today. First, we take a look at it with regard to its market profiles out here. This does not look good. When I look at the daily, this does not look good. When I look at the weekly, and with regard to the monthly, this just says, hey, this is going to pull back. So the interesting thing here with regard to AutoZone, it's below the daily, the weekly profiles. It's above the monthly. 622.06 is wide open. That's another, $23 to the downside. And that might be just simply a minimum, because there is a confirmed A to B equals CD to the downside inside of AutoZone. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 112. S&P is flat out here. And the good news is that we now know about the origin of the phrase bated breath out there. That is from our favorite polar bear. The phrase bated breath, meaning holding or restricting one's breath, was used in Shakespeare's In the Merchant of Venice. 1596. 1596. We've been using that phrase for a long time out here, and that's where it apparently comes from. Apparently was used in other ways at that time. The word bait, meaning to reduce or lessen, is now archaic And that means I'm archaic as well in my use of it, but cut me some slack. But now at least both you and I know where bated breath comes from. And that's because of our man, Polar Bear, who is clearly, he knows his Shakespeare stuff out there, let alone excellent at searching the internet, I would think. So, and you want to stay tuned because he's going to be up next, and he'll take you down the path of least resistance. Hey, how do you like how I just kind of smoothed that in there? There's not really much for you and I to take a look at during the next minute. I think we've really looked at what we need to. Let's summarize what it is that we have out here. We have what we'll call a what was the word? I can't even, a bifurcated, see, I can't really say that, a dichotomous market, which basically means after Friday's move out there, we should be seeing some things inside the indices, some of the different indicators and tools that you and I use to suggest that the market is getting ready to accelerate to the upside. We don't have that. Does that mean that this is a significant market top out there? No, it does not necessarily mean that whatsoever. What are we going to pay attention to today? I suppose we're going to pay attention to where that I know you're going to pay attention to where the QQEW finishes its day. Does it break out? Or does it just simply kind of double top up there? And that alone could have a special meaning. But nothing more special than you staying tuned for the next couple of hours, because you've got your favorite Polar Bear and mine, David White. He's up next. Tom O'Brien, 3 to 5. I'll see you back here on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.